Today, I want to talk about SoFi and delve into the latest data points, break down the significant factors influencing its movement today, and provide a comprehensive overview of everything you need to know.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert: this is not a financial advice video. SoFi experienced a 1.46% decline today, with an additional 0.4% drop in after-hours trading. This is largely attributed to the earnings reports from big tech companies like Google, Tesla, and Enphase. While there were some positives, the overall sentiment was predominantly negative, which set a pessimistic tone for tomorrow's market. But let's focus on today. There were 23.2 million shares of SoFi traded, compared to the average of 36.5 million. This morning saw significant volatility, similar to yesterday, as the market initially showed optimism for growth stocks. However, institutional selling of SoFi shares countered this momentum. This pattern of early and late day selling by institutions repeated itself, creating a sense of déjà vu. In terms of news, Galileo Financial Technologies, a subsidiary of SoFi, announced the implementation of 3D Secure technology to enhance online fraud protection. This is a positive development, as it adds an additional layer of security for online transactions, mitigating risk. According to their website, online debit and credit card fraud is projected to rise to $28.1 billion globally by 2026, a 40% increase from 2023. While investing in fraud protection might seem odd, the projected growth in this sector is noteworthy. Shifting to the data points, shorts returned 73,000 shares today. However, they were active throughout the day, manipulating SoFi's stock price up and down. The current short interest stands at 17.09% of the free float, amounting to 177.4 million shares being shorted. Utilization is at 60%, with a short score of 72.59. The average borrow rate is 0.82%, and the cost to borrow has been minimal for the past 2 to 3 days. In total, there are $1.34 billion in short positions, which is significant. In the options market, there were 3.24 million calls and 829,000 puts. Sentiment-wise, 47% of the options traded were bearish. Based on the call options, there's a consensus that SoFi could reach around $8 by the end of next week, while the put options suggest a potential drop to below $6.50. This indicates a mixed outlook, with some expecting a rise and others anticipating a decline. The open interest in options is also telling, with 9,000 contracts at the $7 strike price, 31,000 at $7.50, 53,000 at $8, and 38,000 at $8.50. Market makers and shorts have a vested interest in keeping SoFi below $7.50, which explains the stock's inability to hold on to gains despite broader market rallies. Despite the stock's struggles, it's important to differentiate between a broken stock and a broken company. SoFi is the former, not the latter. It's frustrating to see the stock underperform, but the company's fundamentals remain strong. I've mentioned before that $7.50 is a critical pivot point. Today, the stock briefly touched $7.66 but couldn't sustain it. As we look ahead to the next few trading days, keep an eye on this level. Additionally, GDP data will be released on Thursday and the PCE report on Friday, both of which could introduce more volatility. Tech earnings could also contribute to market fluctuations tomorrow. Technically, SoFi's chart still looks relatively positive. The stock is above key moving averages, including the 50-day and 100-day. The stochastic indicator shows a value of around 73, suggesting it might be slightly overbought. There's also a bearish divergence, with the red line above the white. The momentum indicator reveals a decrease in retail investor interest, indicating that FOMO, fear of missing out, has diminished. Looking ahead, do you think FOMO will return by the end of the week, or will it continue to wane? Some analysts have started to lower their GDP expectations slightly, which could influence market sentiment. I'll cover this in more detail in tomorrow's pre-market video. This week is shaping up to be very interesting, with no major changes or new analyst ratings for SoFi. Everyone seems to be holding their breath for SoFi's upcoming earnings report. Over the past 90 days, there have been 3 positive revisions and 5 negative ones. The current earnings per share estimate is 1 cent, with a revenue estimate of $566.69 million, slightly down from the previous $578 million due to a negative revision. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.